Hi, my name is Praveen. I am from Target Academy. First of all, a very big thanks to student community. So for making fast track classes very successful. And this video is regarding amendments in auditing for January 2023 exams. This video lectures is exclusively for CMA Inter students who are going to write exams in January 2023. Of course, CMA final students can also use this lecture because I will cover CARO 2020, which is the latest amendment, and also some amendments in auditing, company audit. So those are very helpful to final students also. So let us start with the amendments. These amendments are related to January 2023 exams. So first, section 140 subsection 3. What is this section 140 subsection 3? This is a section which is meant for the auditor who are resigning from the company and the going out of the company by resignation. They need to tell the reason. So if the auditor is not going to tell the reason and they are not submitting the reason, failure of this condition, nothing but 140 subsection 2, failure of this condition, nothing but they need to submit the reason to the company and also to the shareholders and also to the C&AC in case of government company. If they have non-compliance of section 140 subsection 2, they need to pay the penalty. So what is the penalty? So the green colored font or green colored content is the amendment in the section. So first 140 subsection 2 has not amended because it is a duty of auditor to file a statement including the reasons for resignation within 30 days to the company. So for example, A is the auditor, he is resigning from the company and he is going out of the company. He need to file a statement to the company, the reason for the resignation, and also to the ROC within 30 days, and also to the C&AC CAG if the company is a government company. This is a provision mentioned in section 40 subsection 2. But in case if auditor failed this section, he has not filed the statement including the reason for resignation to the company or ROC or C&AC, he need to pay the penalty. He should pay penalty as per section 140 subsection 3. Yes, there is an amendment in 140 subsection 3. Earlier the penalty is only 5 lakhs. So whatever the limit is there, it was amended. So first they have included the minimum limit. This is the minimum limit, 50,000, or auditor's remuneration, whichever is less. For example, auditor remuneration is 30,000. Then whichever is less will comes to 30,000. For example, the auditor's remuneration is 1 lakh. 50,000 or 1 lakh, whichever is less. So whichever is less means 50,000 will come as a minimum criteria. Understood? So in case of continuous failure, yes, there is a fixed penalty and also there is a continuing failure is there, then variable penalty is also there. It is 500 rupees for each day. 500 rupees for each day. So 500 rupees per each day for continuing failure. But the entire penalty should not exceed 5 lakhs. The entire penalty should not exceed 5 lakhs as per section 140 subsection 3. So have you understood? Very simple provision. First thing, so as per section 140 subsection 2, every auditor has to file a statement in case of resignation to the company, ROC or C&AC if it is a government company within 30 days. If the auditor has failed to file the statement, he need to pay the penalty. There is a fixed penalty of 50,000 or auditor's remuneration, whichever is less. And there is also the variable penalty. Every day he is, for example, there is a due date of 30 days, right? From 31st day, he had not filed, 500 rupees penalty. 32nd day, another 500 rupees. 33rd day, another 500 rupees. Until he filed the statement, the 500 rupees will be charged on daily basis. But the entire penalty should not exceed 5 lakhs. For example, if he had not filed the statement for 6 months, 6 months means 6 into 30. 6 months, 180 into 500, this is a huge amount actually. So even though the variable penalty and the fixed penalty should not exceed 5 lakhs, that is the provision. So this is a important provision because 140 subsection 3, so very important in case of casual vacancy, especially resignation case is very important. Next very important part of the discussion is CARO 2020. So of course, as per Companies Act 1956, there is CARO in 1956, there is CARO 2003 is there. So after Companies Act 1956 got changed, so new Companies Act 2013 came into force. As per Companies Act 2013, at first they have released Caro 2015. Thereafter, the Caro 2016 has not up to that mark, and immediately after the year they have amended the Caro. They made a Caro 2016. Even though Caro 2016 is not up to the mark, so there is a criticism is there. So they have framed one perfect Caro. It is in Caro 2020. So Caro 2020 is similar to Caro 2016. It's very similar to Caro 2016. And but the classes in Caro 2016, there are 16 classes are there. But in Caro 2020, everybody are thinking 20 classes. No, 21 clauses. 21 clauses are there. Clauses means auditor has to check that items and auditor has to report that on that items in his audit report. It is nothing but it is like a checklist. So internal control checklist, it is you need to verify the item and you need to report whether it is existed or not. So you need to report yes and also no in his audit report. It is annexal to audit report where he need to report the Caro items. It is annexal addition to the audit report. So who has issued this? What is the first of all? What is the full form of Caro? The full form of Caro is Companies Auditor Report Order. The full form of Caro is Companies Auditor Report Order 2020. So because it came in 2020, so that's why the name is a Caro 2020. So who has issued this Caro? Central government has issued this Caro 2020 by using a power under section 143 subsection 11. So what is this 143 section? So actually 143 section is a section giving powers to the auditor. So while they are conducting the audit, there are some powers required, nothing but right to access books of accounts, right to take information. All these powers are given in section 143. And also there are duties, 143 subsection 1, 143 subsection 3, there are duties to the auditor also. In that 143 section, there is a section called 143 subsection 11 created to give power to the central government. So to prepare any order or to issue any order to the auditor and making the auditor to report on that items. So by using the power under section 143 subsection 11, central government has issued the Companies Order Report Order 2020. Annexal. It is the annexal to the audit report. So applicability of Caro. All companies including foreign company. To whom Caro is applicable? It is very, very important for CMA Inter exams. To whom Caro is applicable? It is very, very important for CMA Inter exams and also to the CMA final students also. To whom Caro is applicable? It is very similar to Caro 2016. So first thing, all companies, they mentioned all companies including foreign company. So all companies including foreign company. Foreign company means the company which having a place of business in India, but they have registered outside India. Example, there is a DMart is there and all those things. Samsung. So they are foreign companies. They're having place of business in India, but they have registered outside India. So all companies including foreign company need to report Caro is applicable. And excluding, they have excluded some companies. That means Caro is not applicable to banking companies. Why banking companies? To banking companies, Caro is not applicable. Because for the banking companies, there is a more reporting requirements as per RBI guidelines. So that's why this Caro may become a duplication to the banking companies because they are reporting so many things in the RBI guidelines and reporting requirements. So if the Caro is make applicable to banking companies, it may cause any duplication to the banking companies because they are already stringent and strict provisions to the banks. So that's why they have excluded banks. And also insurance companies, as there is same explanation applicable to insurance companies also, because so many laws and regulations are applicable to insurance companies. There are stringent and strict regulations and reports to be reported as per the IRDA Act and every body. That's why the insurance companies are also excluded. Next one is OPC. What is OPC? One person company. So OPC is a one person company. As so many sections are not applicable to one person company, like that Caro is not applicable. And next one is a small company. So small companies, to the small companies also CARO is not applicable. Next one is section 8 companies. Section 8 companies. So non-profit organizations. So non-profit companies, the CARO is not applicable. Next one, to private limited companies. To private limited companies, CARO is not applicable. To private limited companies, CARO is not applicable but subjected to conditions. So what are those conditions? First, that private limited company should not be subsidiary or holding of public company. So first condition is for that private limited company, that private limited company should not be a subsidiary, should not be a holding of the public company. If it is a subsidiary company of the public company, or if it is a holding company of the public company, then CARO will be applicable because indirectly it is a public company. So that's why. So next one, the paid up capital and reserves and surplus as on the balance sheet date. To which financial year you are checking the CARO applicability, take that financial year financial statements. As on the balance sheet date, check the paid up capital and reserves and surplus. If the paid up capital and reserves and surplus are less than or equal to 1 crore, it should be less than equal to, it should be less than 1 crore. If it is beyond 1 crore, then CARO will be applicable. It should be less. And loans outstanding and from banks and financial institutions at any point of time during the year, so should be less than 1 crore or less than equal to 1 crore. If it is beyond 1 crore, then CARO will be applicable. Then the private company should satisfy all the conditions, then only the CARO will not be applicable. If any of the limit is exceeded, then CARO will be applicable. They should be within all the limits. And next one, turnover for the year should not exceed 10 crores. Turnover for the year should not exceed 10 crores. Should be less than or equal to. Sir, you have mentioned paid up capital. So what I should include in the paid up capital to calculating, while calculating the limits, means you need to take equity share capital and you have to take preference share capital and bonus shares, right shares, you need to take everything. So what should be excluded from the paid up capital? Don't take share application money pending allotment. Don't take share application money pending allotment. So actually in exam at inter level, they will not ask the calculations part, but for the final students, it is important. So even though if we have not prepared that calculations, we have a ritual that if anything left for the exams during preparation, that will come under as a first question. That's why don't skip this part. So share application money pending allotment should be excluded and calls and arrears should be excluded. Sir, what should be included in reserves and surplus? Both general reserves and specific reserves. At the same time, P&L account credit balance, debit balance means loss. P&L account debit balance should also to be considered while calculating reserves and surplus, but you should reduce that P&L account debit balance. Loans, take both secured loans, unsecured loans. Take both secured loans and unsecured loans. Take both long term and short term. Take both principal and interest, but interest only up to due date, not due. Won't take up to due date. If it is not due, then don't take that interest, because if it is not due, it is not the liability of the company. So while calculating borrowings, you should take both secured, unsecured, both long term and short term, both principal and interest, only due part. So while calculating revenue, turnover is there, right? So 10 crores limit. So you need to take revenue from operations and other income also. Revenue from operations and other income also. CARO will also applicable to branches. This is a very important point. If the company is there, a limited company. So a limited company is there. There is no separate criteria, only take head office. There is no that rule. You need to take only head office, don't take branches. Company means including branches. While calculating paid up capital and while calculating turnover, you have to take entire the company turnover. So not the head office. You need to take a branch turnover also. By taking the entire turnover, overall turnover, then decide whether CARO is applicable or not. So while checking the applicability or taking the entire turnover, if it is applicable, then it is also applicable to branch. For example, the branch turnover is only 10 lakhs, but the entire company turnover is 100 crores. As the CARO is applicable to branch financials also. Of course, the branch is a part of the company. It has no separate legal entity. So that is also another logic. Next thing, CARO 2020 is not applicable to consolidated financial statements. What is CFS? Consolidated FS means financial statement. So of course, we apply CARO to the company, individual company point of view, we apply CARO. For example, there is a holding company is there, H Limited company. It has a subsidiary companies S Limited and another subsidiary S2 Limited. So S Limited and S2 Limited are both are subsidiary companies of H Limited. H Limited is a holding company to S Limited and S2 Limited. Sir, there is a rule in the Companies Act. Every holding company has to prepare consolidated financial statements. There is a rule in the Companies Act. Every holding company has to prepare consolidated financial statements. So, including the financial statements of subsidiary. For example, financial statements of H Limited, take that financial statements, add. There are some rules are there by preparing consolidated financial statement. I just taking the example. Add financial statements of subsidiary company and add financial statements of all subsidiary companies. All these three financial statements combinedly known as consolidated financial statements. Sir, I have a doubt. Sir, whether I need to check CARO applicability based on individual financial statements or consolidated financial statements. Sir, whether I need to check CARO applicability based for the individual financial statements or consolidated financial statement. Sir, you need to check the CARO applicability for each and every company, not a combined company, because it should be checked company wise. Sir, in earlier example, you have included branch turnover, right? So it has a branches. A Limited has a, you told that A Limited has a 3 branches, branch 1, branch 2, branch 3. You have included all the branches turnover, then and check the CARO applicability. Here you are not taking the consolidated. Very simple. Branches are the part of the company. That H Limited and S Limited are different companies. You need to check the or applicability of the CARO for the individual company separately. That's why CARO is not applicable to consolidated financial statements. Right? Understood? So this is the applicability part. This is very, very important for the exams of CMA Inter. So right now there are 21 classes are there. This is important for final students. So for CMA student, if I have skipped the 21 classes part, so we have a ritual that if anything has skipped during preparation, that one is shown as a first question in the exams. So that is a ritual is there. That's why don't skip the part. It's very simple. I have summarized all 21 classes. So please focus on the 21 classes. Try to remember at least important classes. For final students, I am telling you need to remember, right, 21 classes. So I have summarized everything. Right. Let's start with the first class. Earlier it was fixed assets. Now the name itself, the heading itself changed to PPE, property, plant and equipment. So before starting this, let's revise the applicability part. So to whom CARO is applicable? All the companies, including foreign company. To whom it is not applicable? Banking companies, insurance companies, OPC, small company, section 8 company, private limited company, subject to conditions. What are those conditions? It should not be subsidiary and holding of public company. And the paid up capital and reserves should be less than 1 crore, equal to also loans, nothing but borrowings should be less than 1 crore and turnover should be less than 10 crores. Right. So let's discuss about 21 classes. First class is PPE. I already mentioned you, sir, the CARO reporting requirement is whether you have verified in your regular audit, whether you have not verified in your regular audit, it is irrelevant. You have verified or you have not verified in your regular audit, it is irrelevant. If you have verified, then it is okay, report. If you have not verified, verify now and report. These are mandatory reporting requirements. You need to verify and you need to report whether it is yes or whether it is no. First, they are asking to report on PPE, property, plant and equipment. Why? And intangible itself. Why they have mentioned it as a first class? Because most of the funds collected from the shareholders are blocked in PPE, property, plant and equipment, and intangible assets. That's why they have mentioned some points regarding this PPE and intangible assets. First, auditor need to check whether proper records have maintained by the management. By whom? Management. They need to verify. Who need to verify? Auditor has to verify whether they are maintaining proper records. What are those proper records? Not entries in the accounts. They need to maintain the fixed assets register. What is the difference between accounting entry and fixed assets register? In accounting entry, they will just enter the purchase of machinery, purchase of furniture, purchase of TV, purchase of AC. These are all things are there in the accounts, but we don't find details like where is the location of that furniture. Is that in the office, or is that in the factory, or is that in the director's home? Where is the location? What is the present condition? Whether it is working or not, all the details are there, should be there. There should be a proper records and maintain that records. Who has to maintain that records? Management. Who has to verify? Auditor. Auditor has to verify whether they are maintaining or not. If they are maintaining properly, then report yes. If they are not maintaining properly, then report no. Shareholder will take care, right? So frequency, sir, they need to physically verify the assets by taking the register. That is nothing but stock assets verification, physical verification take. So one person from the management regularly means either monthly or weekly or quarterly, based on the circumstances. Based on the circumstances, at frequent intervals, they need to take that record, fixed assets register, and they need to check whether it is physically existed or not. So being it is in the record, it should be there, right? So sometimes theft may happen, sometimes damage may happen. So how auditor or how management will find this theft or damage? They need to verify physically. Take the record and verify physically. Then only you can identify the theft or damage. Otherwise, you think that all the assets in the register are there physically. So you need to verify physically also. Then only you can identify whether it is theft or damage, right? So then what will auditor do? One thing, he need to check whether they are verifying or not. Sir, I have one doubt. Sir, auditor will not be there while verifying the staff of the management. How he can ensure that they are verifying? They tell that we are verifying, right? Based on the reports, based on the surprise check. So auditor will get to know whether they are checking assets regularly. Then material discrepancies. If they have a discrepancy, means difference. For example, if the management staff found out any difference means if the register is showing 10 benches, but in physical there are only 9 benches, one bench was gone. You need to adjust in the accounts whether they are adjusting or not. Who? Management. Who has to verify? Auditor. How? Take the reports of the physical verification, identify the differences, verify the difference have adjusted in the accounts. If yes, then report yes. If no, then report no. So regarding immovable property, auditor has to check whether the company has title or not. Whether the company has title or not. All the green color things are amendments. So for example, the company has a land and building. It is immovable property. Most of the land and buildings of the companies are with the promoter's name or in the name of promoter. It is very dangerous to the company and the shareholders. So auditor need to ensure and check all the immovable properties like land and building and plant and machinery, whatever the fixed immovable structures are there, that should be on the name of the company. So if yes, then report yes. If no, that should be no. Specify the change more than 10%. Actually, if there are any change is there, that is increase or decrease, if it is more than 10% increase in the assets, or if more less than 10%, either increase or decrease. If it is more than 10%, then you need to report the details. And Binami property. What is that Binami property? So you all know Binami. Binami means one person is there, he has so many amount of money, either black money. If he is not reporting under his name, he is reporting under the name of the other parties, like his driver or like close person. So all those kind of things are Binami properties. So why the people are doing these things? It is a very happiest thing having the land registered under their names, right? but why they are avoiding their names and the landed building? For example, if you want to contest in the elections, you should have the limited property, and you should maintain one portfolio or affidavit you should provide. In that affidavit, if you should maintain the limited assets and properties to avoid the thing, and to for so many examples are there. So to avoid tax and for tax evasion, and to find politics point of view, they are maintaining binomy properties. So that is also should be verified by the auditor. Next one, inventory. So like fixed assets, auditor should also ensure that whether management are checking the inventory property. Of course, auditor will also do it at the end of the year, but management has to do regularly, not to wait for the auditor, because it is a management responsibility to conduct the business in an effective and efficient manner, right? What is that effective and efficient manner? They need to check everything. They need to maintain the records. They need to verify physically they are existing or not. They need to take care of the assets and stock. So whether they are doing that thing or not, auditor has to report. So auditor has to report by whom, management, frequency at reasonable intervals, and material discrepancy. Discrepancy means difference. If they are finding any difference between the records and the stock, physical stock, they need to adjust the accounts. So adjusting entries. So whether they are doing that thing or not, auditor has to report that. So most of the students will write in the exam, auditor has to physically verify, auditor has to adjust the discrepancies. All those kind of sentences are written by the students in the main exam. Auditor has to, not auditor has to. Auditor has to, not auditor has to. Auditor should report whether the management are maintaining records, whether the management are find out any discrepancies and adjusted in the accounts. Management has to do that things, and auditor has to verify whether they are doing or not. Not auditor has to do that things, right? So avoid using has to, use a should in place of has to, right? So while I am explaining, I am using has to or need to. So don't use that has to or need to. Being it is an explanation, it should reach to the student. That's why I am using the non-formal language, but in formal way, you should replace has to with the should. So next one, working capital limits in excess of 5 crores. If the company has working capital limits, what is working capital? Current assets minus current liabilities. Calculate that working capital, and if it has a excess of 5 crores, then report that thing. So next, number third clause is the loans and advances to the directors or interested parties. So aggregate amount, report aggregate amount, how much of the loans are given to the interested parties, and outstanding in the balance sheet date. Verify the terms and conditions, on which terms and conditions they have given loan, what is the interest rate, when the director, when the interested party will pay to the company. So what is the installment, when they will going to pay, whether they are paying or not regularly. So any if they are not paying regularly, how many days they are not paying. So whether they have taken any action, it is more than 90 days, whether they have taken any action, recovery steps. And these are the green things are the amendments. Specify the amounts of any renewal or extension or fresh loan, even though they are not paying. So the company is giving a fresh loan to the director. So that itself is showing the director is manipulating. So report that things, whether any renewal or extension or fresh loan granted to the that overdues settled to settle that overdues, they are giving loan. So this is very dangerous, right? So he is not paying loan, we are giving loan to settle that old loan. It is very dangerous. Report that thing. Reporting of any loan granted or repayable on demand and without specifying any terms or period of payment. Without any terms and conditions, they are giving loan to interested parties. That itself is showing they are manipulating. So it is a very serious thing, right? Those are the funds of the shareholders. So auditor has to report, and then shareholder will take care. So next, number fourth class, compliance of provisions under section. So 185, 186, what was this 185 and 186? While you are making loans to other parties, while you are investing in the other companies, while the company is giving guarantee to the loan taken by other parties, it's very serious thing, because those are the funds of the company they are diverting. Giving loan to other party means diversion of funds. Investing in other company means diversion of funds. Giving guarantee to other company is a very risky thing. It is taking indirect loan. If the party is not paying, going to pay the loan, if they have made any default, then company has to pay. So that's why these three things are very serious. That's why Companies Act have mentioned section 185 or 186. That is, you need to take the permission of the shareholders before making any investment in the other companies, before giving any loan to other parties, before giving any guarantee to the other parties. So provide the details thereof. So shareholder got to know. So what is these things? What are the loan? Whether they have taken in mind their permission or not. So they have to check, cross-check the things. That's why auditor need to report, and it's a very important. Public deposits are very, very serious because they are taking the deposits from the public. They need to comply with the sections of 73, 76 to 76, and they need to comply RBI guidelines, and they need to comply the NCLT, National Company Law Tribunal guidelines if they have. If any, they need to comply, but obviously they need to comply RBI guidelines. But NCLT means NCLT issue some rules and restrictions to some companies. If there are any rules and regulations as per NCLT, they need to comply. That thing auditor has to check whether it is as, report as, whether it is no, report no. Sixth one, cost records. Yes, if the company is compliance of 188 section, it is obligatory to maintain cost records. If the cost records are applicable to the company, then to whom cost records are applicable? So we have already discussed in section 148. So PESGF, we have prepared one shortcut. So to specified companies who are engaged in specified goods and services. To remember that specified goods and services, we have prepared one shortcut, PESGF and M square T square S. And also another condition, 35 crores turnover should be, they should exceed of 35 crores turnover. So by complying these two conditions, that company should maintain cost reports, but auditor has to verify whether they are maintaining or not. If yes, report yes. If no, report no. Statutory dues. What are those statutory dues? Income tax, GST, all those things which are payable or deposit to the government, GST, income tax, PF, all those things. So if there is no undispute, they have to regularly deposit. If there is any dispute, the amount should be deposit, whatever the amount involved, that should be deposit in the separate bank account. So you need to report amount. If there is no dispute, then they have to deposit regularly to the government, right? So whether they are depositing or not. If not, report the amount if the due is more than 6 months. So right. So if the due is not more than 6 months, then just tell them so they are not regularly depositing. If the due is more than 6 months, tell not regularly depositing, and also amount also. They need to report amount also. One thing you need to focus, sir, if the company is not regularly depositing GST to the government, if there is any delay of 2 days, you need to report irregularity. If the delay is more than 6 months, you need to report irregularity and also the amount. So in exam, students are failing to answer this question. They are giving that the due is there, the company is not regularly depositing, but the due is only for 5 days. Student is writing no need to report under CARO. They need to report under CARO because there is irregularity. Amount, for amount purpose, they need to report. They no need to report because it is less than 6 months. But auditor need to report irregularity. First thing is irregularity. So if it is a dispute is there, amount involved, and forum where the dispute is pending, where the case is pending, we need to High Court or Supreme Court, all those things. Number 8, transactions not recorded in books of accounts. This is a new clause included. Dummy transactions or avoided or surrendered disclosure income tax. Reporting on disclosure of transactions not recorded in the books of accounts but have surrender or disclosure as income in the tax assessment. So of course they have not disclosed in the books of accounts, where as per the tax purpose they have mentioned it in the ITR, income tax return. Yes, they should reflect in the books of accounts also, because they have received the notice that one of the capital gain have not mentioned in the books. So they have amended the ITR and they have shown it in the ITR and they paid the tax. But in the books of accounts, they have not recorded that thing. So auditor need to verify whether they have reflected in the books of accounts or not. If yes, then report yes. If no, then report no. Default in payment to banks and financial institutions, governments, debenture holders, because nobody, government is taking care that NP, non-performing assets, NPAs in the banks and financial institutions and to the government and also to the debenture holders are increasing day by day. Actually, I'm doing video recording, so you don't know the date, right? So last day news also, there is a Nirmala Sitharaman has mentioned in the in her speech that banks have written off so much of the NPS in their books of accounts. So day by day the NPS are increasing. That's why they are also taking care of that reduction of the defaults from the companies. Most of the corporates are not paying loan regularly. So individuals will pay it, right? So because that loan, whatever we have taken small amount of loan, we make it as our obligation and we definitely discharge it. But corporates are not paying for so many reasons, and amount and period of default, reporting whether the company is declared willfully defaulter by the bank, and reporting whether terms and conditions applied for purpose intended. If they have not paid, there should be a provision in the terms and conditions whether to seize the asset or whether to give an auction to the asset, and reporting whether the funds raised in short term have been utilized for the long term purpose. It's very serious thing. So they have raised the funds for short term purpose, but they are using that funds to the long term. For example, you have taken loan for 2 months, that itself is saying you need to repay within 2 months, but you have invested in the plant and machinery. Sir, being a commerce student, it is very simple. You need to repay within 2 months. You have invested in the plant and machinery. It is impossible to recover the entire money from that plant and machinery within 2 months. If it is yes, then it is okay. You are investing in the long-term assets, right? So it is very impossible to recover in a short period. So that's why don't use the short-term funds to invest in the long-term assets. So it is very difficult to pay the loan if you have not any other source of income. So report on whether the company has taken any funds or any entity or person on accounts and meet obligations to the subsidiary joint venture. So they are taking the money to meet the obligation of the subsidiaries or joint ventures. This is a diversification of funds, right? The subsidiary company has applied loan to the bank, but the banks are not providing loan to the subsidiary company. That's why holding company, means holding company is taking loan for the purpose of subsidiary company. It is very serious thing, right? So auditors need to report. So auditor reporting on whether the company has raised loan on pledge of securities held in its subsidiary joint venture. It's very bogus thing this is. So they are pledging the securities, but that securities is a subsidiary company securities. So both are same companies, right? So yes, holding company can influence the subsidiary company. And so it is mentioning one provision or one entry in the subsidiary company, issue shares to me, and I will pledge that shares to the bank, and I will take loan. So only the piece of document they have created internally. So this is a bogus things. So that's why they have mentioned here as an amendment. Number 10, default in paying of banks and debenture holders amount and amount of default, and whether any preferential allotment is there. So private placement is there and all those things. They need to comply provisions of Companies Act. And 11 is a fraud under section 143 subsection 12, auditor report to fraud to the central government. They have and also one thing is added, auditor has considered whistleblower compliance, if any. For example, they have mentioned some additional requirement to the auditor. So what is whistleblower? For example, there is a thing is there in the old Indian movies. So everything happened, and at the climax of the movie, the police officers will come. So until the climax, the policemen will not come. So at the climax of the movie, they will come. Like that, the government got to know the scam after everything is happened. Then government is unable to clear anything because it is a huge time. So they have already happened. The scam happened, and the money is diverted to other country. And so government role is nothing. They are just calculating the scam amount. They are telling to the people, but they are not doing any good things to the shareholders who has occurred any damages. That's why government thought one person is there who knows the fraud before everybody knows. So that person is nothing but auditor. So auditor will know the fraud or significance of fraud, so any doubt of fraud. So first of all, auditor has to tell to the government, and government will take care. So it is a prevention, and that is somewhat by this way the government will know the fraud some bit early way, and they can do anything to the damaged shareholders. Nidhi companies, that is a whistleblower thing. Whistleblower means auditor has to blow the whistle, not the original whistle. They have to tell to the government, I have a doubt in that company, there is something is happening. Then central government will take care, and they will announce the investigation and all those things. They will order the investigation. Nidhi companies only this clause will apply. They need to maintain the own funds and deposit. They are taking deposits to the public, like chit funds are there, and they need to maintain 1 rupee for every 20 rupees. Because if somebody has a default of payment of chits, then a company has to meet that fund, meet the defaulters amount on behalf of the default. That is the responsibility of the company. So to meet that amount, they need to maintain some ratio, one rupee own funds for every 20 rupees ratio, and 10% unencumbered deposits. Whatever the deposits they have taken from the public, they should not give entire deposits to as a loans to other parties. They need to maintain 10% as a fund separately, because if any person have withdrawn the money before the due date, company is able to pay the amount to the person. So then only the company will run. So otherwise the trust will be break down, and every people will ask the money to repay again. So that's why they need to maintain 10% unencumbered deposits. That means they do not, they don't 90% of the deposits are allowed to give loans to the other parties, 10% should not be allowed. So default in payment of interest on deposits. If there is any default in payment of interest on deposits, the company is going to close. So that's why it is a very important thing, then that should be reported. Next, number 13, transaction with related parties. RP means related parties. They need to follow 177 and 188 sections, and as per accounts section, accounting standard number 18, that related party transaction should be disclosed separately. And number 14, internal audit system. Internal audit system is commenced within the size and nature of the company. If the internal audit system is applicable to the company, auditor has to report. So, and also, so internal auditors who are, whether the report of internal auditor is submitted to the statutory auditor. Statutory auditor means he himself, right? Whether he has received the internal auditor's report or not. If yes, report yes. If no, report no. And non-cash transactions, provisions of section 192 are applicable, whether they have complied or not, verify that thing. And 16, these parties has to register with RBI. So who are those parties? So first one is a NBFC, and next one is a core investment company, and next one is a having fulfillment the criteria. At the same time, core investment company 1 and core investment company 2. So they have mentioned these two companies, and NBFCs who are, so very simple point in India. So anybody who are anybody like any company who are doing finance business, they need to take with registration with RBI. They need to follow the guidelines of RBI. That is a simple thing. So if you are auditor for the NBFC, you need to check whether they have registered with RBI or not. If yes, report yes. If no, report no. Cash losses. If you are an auditor to the company and the company has having cash losses, what is the cash loss? Not a P&L account loss. So you need to adjust non-cash items and find out the cash loss. If it is a cash loss, if there is a cash loss, then report that thing. Then registration, resignation of statutory auditor. We have already discussed the amendment. If the statutory auditor has any resigned anything, that auditor has to, that whatever the auditor is reporting this CARO, he has to mention that issue and objections and outgoing auditor details and everything, reason. And number 19, expected dates of realization of financial assets and payment of financial liabilities. They need to financial ratios and nothing but important financial ratios regarding financial assets and liabilities. They need to report the thing. 20, transferring of unspent amount. So whatever the ongoing projects, for example, I have taken 5 crore loans to construct the project, but I have utilized only 4 crore loans. Whatever the 1 crore is unspent amount is there, within the period of 6 months of expiry of the financial year, they need to transfer it to the separate account as per schedule 7. And whether any amount remaining unspent has to transfer to the special account. Whether they have transferred, report yes. If they have not transferred, report no. Because if for example, if one company is there, one person is there, I am talking about the company, take the person. Bank has given 5 crore rupees loan, but the work was completed within 4 crores. There are more chances of misutilizing the balance thing, because they try to show 5 crores was happened, 5 crores was spent. So that's why we need to maintain the proper records. The auditor has to verify whatever the unspent amount, it should be transferred to the separate account. Reasons for qualifications and adverse reports 21. It's a very common thing. Whatever the things you have mentioned above, if you say yes, no need to write and no need to give any reasons. If the auditor is saying yes, for example, fixed assets, they are verifying regularly, yes, no need to give reason. But if you are saying no, you need to give the reason why it is no, what is the remark. So that is the thing, you need to give the reasons for qualifications or adverse remarks. Qualification or adverse remarks means negative remarks. Next amendment is discount. Issue of shares at discount is strictly prohibited. It's a very, very important amendment. Yes, it is strictly prohibited. The amendment is regarding exception. Yes, in case of sweat equity shares, you can issue shares with discount. This is the amendment here. Creditors, to the creditors also, in case of debt restructuring scheme, remember this word, in case of debt restructuring, you are issuing shares to the creditors, you can issue that shares for discount. This is amendment. In case of non-compliance, if you have non-complied, you have issued a shares for a discount other than these two cases. So company and every officer in default need to pay the penalty 5 lakhs or amount raised as a discounted price, whichever is less. 5 lakhs or amount raised under discount, whichever is less, and company refund the fund at the rate of 15 12% interest to the shareholders. You need to refund that thing. For example, if the company is issuing the shares, the face value of the share is 10 rupees, but they are issuing for 8 rupees, other than it is a sweat equity share, or other than to the share creditors in the debt restructuring scheme, other than these two cases, if they are issuing for discount, first they need to refund back the money with the interest at the rate of 12%, and they need to pay the penalty, whatever the money raised, or 5 lakhs, whichever is higher. So that's all for this video. These are the amendments for Jan 2023 exams. So all the best for your exams, and very thankful to the student community supporting Target Academy. And I need to tell one thing. So we have announced the free booklet, free fast track book to the people, and we thought that only 100 or less than 100 students will collect. So based on our past experience, but right now 500, above 500 books we have supplied for free of cost. We have collected only courier charges. So but beyond 500 it is not possible to the target, but we try to give other people to other, they are also pending orders of around 200 orders are there, so pending orders. So we try to give the free booklet, but I think the management will collect some charges to the excess. They have given some coupon codes to you, but the coupon codes will expire on December 20. After December 20, they will collect some nominal amount. So of course, we want to give it as a free booklet, free fast track book to the students, but due to the huge crowd, we have taken the decision. But right now we have planned to give 700 books to the 700 students, for free books to the 700 students. But beyond 700, we need to take a decision whether to give for a free of cost or charging nominal amount. So nominal means very nominal amount, printing charges or something else, or half of the printing charges. So once again, very thankful to the student community supporting the Target Academy, and also making the fast track book and fast track classes very successful. Thank you very much. All the best for your exams. Bye.